So the markets are ripping today. The S&P is up 2%, the Nasdaq is up almost 3%, and your portfolios are probably up in between 5 and 15% today. AMC Stock doing incredible, GameStop doing incredible, Redbox absolutely killing it. So let's talk about what is going on here. I know we have the executive order. I know we have some other things happening. We do have economic data that comes out tomorrow as well. And overall, this rally is based off of the Fed. The Fed gave us a timeline to expect them to slow down raising rates or potentially stop raising rates because we all know we're heading into a recession. We all know the Fed cannot help American families with the real causes of inflation, which are supply chain issues, the war in Russia, Ukraine, the lockdowns in China, aka energy prices as well as food prices. Those are the big things that are dragging on the economy, which the Fed cannot control. So essentially what they are doing right now is they're trying to get rates up as quick as possible. They spoke about going past neutral, which is higher than 2.5% to 3%. So the Fed wants to get rates up there. So when we do go into this recession later in 2022, if not 2023, they are able to cut rates and accommodate the markets. So we got a lot to talk about. The work is cut out for us here in this video. Let's make this money. I hope you guys are having a green day for the portfolios. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time, as well as over 100 other like-minded traders, check out that link pinned down below in the top comment. We hit this rally on the head. Couldn't have went any better. It was pretty easy to actually see coming, but nonetheless, let's get into it, guys. So, like I said, the Fed essentially said yesterday, they said we are going to exponentially raise rates with these 50 basis point rate hikes back to back to back to back. And then later on throughout the year, in the back half of the year, essentially, they're going to reevaluate their effects on inflation. And that was essentially saying, like, hey, we might come in and save the markets. We might at the end of the year. It's not a guarantee, but it's enough for the markets to latch onto when you are substantially oversold. Now, do not get it twisted. This is a bear market rally, but they can be very explosive. Yes, shorts covering across the board, but what is not shorts covering is the moves that we are seeing in AMC, GameStop, and stocks like Redbox. Redbox is up 32% today. Very, very violent. GameStop is up almost 11% and AMC is up 2.3%. But overall, it's been a pretty muted day as far as volatility. There hasn't been a lot of volatility in the S&P or in a lot of these retail stocks comparatively to what we have seen over the last couple of weeks, right? The S&P has been pretty much straight up. You really haven't seen a lot of those, back and forth swings. You're not, dropping 0.5% in 10 minutes or rising 0.5% in 10 minutes. So these days are actually easier to trade, and you are seeing a bit of a short squeeze in the overall markets, like I said. But at the same time, what is actually happening to GameStop and AMC and Redbox specifically is very interesting. I want you guys to take a look at this. So it says SEC fines broker $125,000 for halting GameStop trades for 10 minutes, then denying it happened. Because if you look at, just type in GameStop stock news. Probably the easiest way to figure out why a stock is potentially rallying. This comes up. And I don't think a $125,000 fine is such a big deal, but it kind of shows the SEC maybe will do their job. Maybe this next time around we will not see as much manipulation. Maybe these things will not play out the same way that they did last time. So there's obviously a reason to be pretty bullish on this. Again, it's not because of the dollar amount, it's the principle behind it. And we can make 100 other analogies why that's important for real life, for, even investing sakes. And that's probably why you're seeing a bullish reaction today. On top of that, we know the executive order is now in the next 5 trading days going into effect. And I think this is going to be a substantial rally that we see coming. And that's where I am putting my money with those June 10th and June 17th $20 calls. I think there's a very attractive risk to reward profile, specifically on AMC stock. Now, something else that I do want to point out is that GameStop has seen a much a larger rally than AMC stock over the last couple of days. That is because people right now, they're moving money around like nobody's business, right? Everyone's talking about Redbox today. The next day, it's GameStop. The next day, it's going to be AMC. So I do think it's kind of like, bear with me here for this comparison, kind of like the NASDAQ falling or rising more than the S&P or the Dow. It flip-flops, right? So some days the Dow will be up 2%, NASDAQ's up 0.5%, or days like today, and it's a pretty strong rally across the board, so maybe not the best example. But even today, the NASDAQ up almost 3% and the Dow Jones up about 1.5%, right? They go back and forth. And that's the way that you should look at retail momentum trading as of right now. You're even seeing this in institutional trading. One day, it's GameStop. The next day, it's AMC, but I think there is a certain degree of extreme manipulation in AMC comparatively to these other stocks, meaning that when shit really does hit the fan and when this executive order really does go into effect, I think AMC, one, offers the best risk to reward profile on an actual fundamental basis, right? You're buying the stock with a 1 price to sales ratio. It's not expensive from a value perspective. But even on top of that, I think all of the manipulation, all of the synthetic shares out there, all of the short interest, all of the option activity, the, Mary puts, all of these things that have happened over the past year is really going to culminate into a massive shit show for these hedge funds that have short positions. And given the liquidity environment right now, given the tensions with China, I do think you are going to see the executive order get implemented and that it is not going to get retracted within a couple of days like it did in January as well as in June. And even the Fed yesterday, they did say that there could be financial stress in the system based off of unregulated markets, essentially like market makers being able to do what they want to do, right? You're not really getting the SEC down their throats. They're not watching them the way they should be. And even the Fed acknowledged it in the Fed minutes as of yesterday. So I do think personally there's a lot to be bullish about, and I do think personally the days where AMC is not as strong as GameStop are really the days to get into these positions, right? If you were somebody that wanted to trade GameStop and AMC, well, I don't blame you there. They're both explosive. You can make a lot of money, but like a day like today is not a day I would be buying GameStop, right? I would be buying AMC and then vice versa. If GameStop, whatever, is lower, AMC is higher, maybe it's a good idea to buy GameStop because they do correlate, but point is they're going to go back and forth, but I do think AMC is where the money is going to be made. But there's a lot of people talking about the cost of borrowing GameStop. There's a lot of people talking about the short interest in Redbox, but I do think our time is coming, baby. So I am very, very excited. Like I said, if you guys want access to all of my trades in real time, link down below in the pinned comment. Executive order does go into effect on June 3rd, and I do expect a rally until June 3rd, and then I do expect an explosive rally, a major, major rally after June 3rd. And you could see this in the option activity as well. Hedge funds, they really don't like to buy out the money options, right? I know a lot of retail investors, they don't have as much money, so they'll go out of the money, they'll spend a small amount and hope for a big gain. Well, a hedge fund, think about it. If you're going to spend $1 million or $10 million on an option position and you have that kind of money, all you need is 100% to make a lot of money. You don't need 1,000% or 5,000% like a lot of retail investors like to make, but it shows you a lot when hedge funds are going pretty far out of the money, and we have seen that as of recently quite a lot. Not necessarily today in a big way. You are seeing a lot of these July 15th $14 calls coming through. Most of these orders in between $60,000 and $150,000. A lot of these $14 July 15th calls. So I think that's a good sign right there. That's about $2 out of the money as of right now. But you've also seen a lot of the 145 expirations for 2023, as well as $50 strikes for 2024 that have been heading onto the option chain. And the last time we actually seen that was before the stock ran up about 200%, which was not all too long ago. And overall, I do think we could make moves to, $20, $25 even before the executive order actually does get implemented, as there will be a lot of excitement and possibly a lot of these shorts looking to buy shares or looking to buy call options to kind of hedge out their potential loss. Now, the cost to borrow is going up on AMC stock in a quite dramatic way here today. It went up about 100% overnight. Cost to borrow max is now at 15%. Cost to borrow average is at about 8%. Cost to borrow minimum is at 3.5%. Short interest of free float continuing to rise today, now at 22.51%. Current shares that are sold short, 116.03 million. 100% utilization, days to cover sitting at 3.45. Free float out on loan is sitting at 33. So the data here looking very, very good. The option activity, the positive order value for the day, 16 orders totaling $5.78 million, positive order value of 38%. Not sure exactly why it's saying that, because you're seeing a lot more calls placed on the day than puts overall, and it does surely seem like there's a lot more call activity. You guys can see pretty much all of this for today has been calls besides this one put option right there. So little bit confused why that is actually happening, but nonetheless, let's talk about the data that is going to be coming out tomorrow, because that could also move the market. So for Friday, for tomorrow, you do have unemployment rate for May, non-farm payrolls for May, participation rate for May, average hourly earnings, ISM non-manufacturing PMI as well. And that's something the Fed looks at, right? The PMI. So if that does come down as well, again, if these data points look good, if unfortunately, if the unemployment rate does go up, non-farm payrolls do go up, that could be a bullish thing for the markets, because, hey, the faster the economic outlook deteriorates, the faster the Fed is potentially going to U-turn. So that's kind of what I'm looking forward to. I don't know if we're going to see that kind of U-turn yet. Obviously, in the Fed, I wouldn't expect that. But if the data does continue to not look so good, you're going to be closer than not to actually seeing that. Now, some main headlines that are coming out on CNBC is this one: home listings jump as sellers worry they may miss out on red hot housing market, and that is going to help push down prices of real estate, which is also going to put some pressure on the Fed to some degree or not. When real estate does start to go down, it does tend to go down in a pretty big way. You don't really tend to see like 3 or 5% drops in real estate. It's usually like 10% drops in real estate. Last time we actually got that was the first time that I bought a house in 2019. Real estate market actually went down about 10-15% in about 2 months. So it can happen pretty fast, and that will also help dry up liquidity for the hedge funds, because a lot of hedge funds have put a lot of money into residential real estate, as there was a good reason to. Over the last 2 years, you couldn't get any real safe return in bonds, right? They didn't yield you anything. So a lot of hedge funds and other investors did put their money in real estate, where you can easily get a 5 to 10% cap rate and free cash flow rate. So that is that. First quarter GDP did decline at 1.5%, worse than thought. Jobless claims edge lower, and this is basically the updated GDP numbers for Q1, and that's what it says: decline at a 1.5% annual pace, worse than the 1.3% Dow Jones estimate, and a write down from the initially reported 1.4%. So, not good overall for the economy, but good for the markets as far as when the Fed will potentially U-turn. It says initial jobless claims totaled 210,000, a decline of 8,000 from the previous week. Kind of contrary to that, not really a good thing for the overall markets, just because the labor market is so hot. That's what the Fed is gauging their decisions off of. Essentially, the Fed has said if the labor market does remain to be hot and does continue to be elevated, then, or low, I should say. That's a weird way to put it, elevated. If it does remain low, then they can basically raise rates all they want. So that's pretty much going to be all for this video. We got a lot more to talk about in other videos. I do specifically want to go over the odds of a gamma squeeze coming around that June 17th expiration, and what that could just mean with the executive order. And I think you guys will find a lot of value out of that. I certainly am pretty excited about what I'm seeing on the option chain around that period. So that's pretty much going to be it. Not too much else to really add. This is a bear market rally, and they can be very violent, very explosive. Doesn't mean the rally is going to continue, but it does look like we might have the first green week for the overall markets since the last 8 weeks. So it's been pretty bad out there. Congratulations to you guys if you're watching these videos, if you're still invested in the markets. A lot of people have capitulated a long time ago. and they have since left the markets. And that's where you guys come in, buy these stocks, hold them, and make all of the money. So thank you guys for watching. Hit that like button, subscribe to the channel, get your free stocks down below in the description with Webull, Moomoo, and Public. Very important you guys do that. If you guys want to get some free money, maybe make a free trade on AMC based off the free shares you get. You could sell them, you could do what you want. Not going to go any further than that because it's not a recommendation, but get yourself that free money. Yeah, that's pretty much it. So leave your thoughts down below in the comment section. Come join us on the live stream, 10 p.m. to 11 p.m. Eastern Standard Time. We will be live. That is it. Thank you guys for watching, and I will see you in the next one.